then we would just create a massive wealth inequality in society as hyper Bitcoinization happens. So that's kind of the underlying thesis for the Bitcoin bond company.
Yeah. So basically, the core friction you're trying to solve is there is institutional money with demand to allocate to something that actually outperforms inflation, and it has a reliable high performance, and so they can't allocate to actual Bitcoin, obviously. And so let's look at the demand side first. How pervasive is that mandate limitation? Are there still like a minority that have access and they can still buy, say, ETFs? Or is it like the absolute vast majority of the institutional money is limited in their ability to buy Bitcoin?
Yeah, so private credit funds are between $1 and $2 trillion today. So if we just look at that, in a vacuum, then that's a large number. And then, of course, adjacent to that, you have all these different fixed income portfolio managers, for example, right, where they can't even invest in preferred stock, right? So when Saylor describes his offerings as fixed income securities, I agree with him. Economically, they are fixed income securities, but they don't have a maturity. They're preferred equity. They go into equity portfolio managers bucket, and then those equity portfolio managers outperform their peers over on the fixed income side. Their peers on the fixed income side are not going to let that happen without making some moves over there as well. And so they need to have vehicles that have a maturity, that are in the form of notes, that have a stated yield on them, and that they're going to be able to invest in.
All right. And then conversion of, so Bitcoin itself doesn't have a yield, obviously, right? So what are the strategies to convert that price appreciation into a more predictable yield in a way that doesn't cause problems? Because with yield, you have a fixed promise, right? And then with Bitcoin, you have everything except lack of predictability, at least in the short term.
Yeah. So that's exactly it, which is that the vehicle doesn't have any cash outflows for 5 years. And so all of the interest accrues so that you sell all of the Bitcoin after 5 years and you send the proceeds down the cash flow waterfall. And so that way you have a way of having the yield without having any cash outflows. And so I think that, that's the way to convert those capital gains into a principal and interest product.